Japan's benchmark Nikkei index soaring more than 10% after starting the week with its worst drop since 1987. That drop was in part reaction to a weaker than expected U.S. jobs report. While the concern is very real, one economist we spoke with says the decline we saw on Wall Street yesterday is normal.
I'm just very hopeful that things are going to get better.
Many Americans are sharing that same sentiment after U.S. stocks took a hit on Monday. World stocks started to plunge Friday after the U.S. jobs report showed the unemployment rate at 4.3% in July. That's the highest it's been since October of 2021. The report raising concerns that high interest rates meant to tame inflation might push the U.S. economy into a recession.
I try not to panic because I'm like, well, if the market goes down, then at some point it's going to go back up. And we've gone through recessions before, and things get tough, and, you just have to tighten your belt.
Many people are questioning why the Federal Reserve is not implementing an emergency interest rate cut. Experts say those usually only happen when there is something significantly wrong with the economy.
Quite honestly, I think that if you were to see the Federal Reserve go in that direction, it might actually exacerbate the issue that we're seeing in markets, because market participants would look around and say, hey, is there something that they know that we don't? Is there a real problem here?
Economists say even though the situation on Wall Street is a real concern, when it comes to things like your 401k, don't panic and do not make emotional financial decisions.
I know it can be scary. I know it can be a little bit nerve-wracking, but this is actually normal for how markets tend to move. It's just not really the most fun going through it.
Despite yesterday's losses, a Goldman Sachs economist says there's only a 25% chance of a recession happening within the next year, and things are looking brighter on the markets as the S&P 500 futures are up over 1%. Ray Brewer, WMUR News 9.